G'day everyone, Greg Canavan with you, with Ryan Dins. We've got another Q&A session coming up. But before that, Ryan, there's a fair bit been going on in the world of macroeconomics and cryptocurrency. So let's quickly look at the macro situation first. And one of the things that stands out to me is the big rally in the US dollar over the last sort of week or so. What are your thoughts on that? Where do you think that's coming from?
There's probably a few reasons. I think all this came on the back of the Fed minutes last week, where they talked potentially about raising interest rates, albeit in 2 years, which, you know, if you think about it, that's like a bit of a nothing prediction, because who knows what's going to happen in 2 years. But off the back of that, we did see a bit of it might even be a flight to safety. And I think this is something you wrote about, Greg. You said, you know, there's two reasons the dollar rises generally. If global growth is good and American companies are making profits, money flows into America, which is one reason. But the other reason is if people are, you know, a little bit scared of the macroeconomic outlook and they're looking to move to safety. And I think it was probably more of that, to be honest, because as the dollar rose, we saw at the same time the Australian dollar fall, and it fell to like a 6-month low. And, you know, the Australian dollar, as we all know, is a good proxy for global economic growth and commodity demand and stuff like that. So, yeah, we've seen a bit of a shift. Whether it's just a temporary blip in the radar, I'm not sure. Or whether we'll see the resumption of the US dollar declining, which has been a bit of a trend for a while, and whether we'll see the Australian dollar tick back up, who knows? But I think what it does show you is that the world right now is reliant on what is the Fed going to do next. And if you think about it, that's really a bad market to be in, because everyone's hoping the Fed, you know, prints more money or keeps interest rates lower for longer. And this is creating distortions in the economy, and it's creating distortions in currency markets and commodity prices and everything. And the longer it goes on, the worse these distortions become. And I think, you know, that's one of the central premises of this service, is that the more intervention you have, the faster sort of the monetary system is going to decline, because you create too many distortions. And at one point, you know, it'll be like the boy that cried wolf. Just the Fed actions won't work, and then they'll be stuck. What happens then? So yeah, I think that's what happened. That was sort of the big news currency-wise last week, and it had some effects on the gold price. The gold price came down a little bit as well. Bitcoin came down as well. I think, though, the good thing about our recent recommendations to buy gold and to dollar cost average into Bitcoin is that we're sort of taking advantage of this volatility to buy in incrementally and not pick the bottom. So I think that was a good thing. And the other thing would be is the fall in the Aussie dollar offsets some of these losses to some degree, because obviously in Aussie dollar terms, the fall is not as steep if the Aussie dollar falls. So yeah, a few things going on.
Yeah, I mean, certainly. And just to add to that, I guess from the context of this new money system that we've been talking about, and you know, we've written about the role of the US dollar as being the world's reserve currency, and it is a very central part of the old money system. And from my perspective, and I think we've written about this in some of the reports, is that out of all the fiat currencies, the US dollar is going to be the last man standing, purely because of its role as the world's reserve currency. So when, as you said, you do get a bit of that risk-off type of move, and you get speculators all of a sudden saying, well, the Fed's going to tighten earlier than we thought, we're going to unwind some of these trades that we've had on, and that means capital moves back into the US dollar through that deleveraging process. So I guess the question is whether this is a really short-term reaction to this sort of unexpected news from the Fed, or whether it is more of a early warning sign that the global economy might be slowing post all the stimulus that's run through the economy following the pandemic. And my view is that it's probably a 50-50 outcome at the moment. But one thing that I think people should be aware of is the fact that bond yields have also come down considerably from their highs a few months ago. And what that means is that the bond market is now saying that inflation is not the risk it was just a few months ago, and that the bond market is now starting to see a slowdown in the global economy emerging, because there's been issues with the US fiscal stimulus program that was expected. There was meant to be a huge, I think around 6 trillion budget coming through. That's been held up a little bit in the US political system. So it's not going to be as soon as what was hoped. And going back to what we talk about, the fragility of this old money system, or this traditional financial system, is that when you don't have that stimulus propping up the economy starts to slow and everything reacts to that. And you've got so much debt in the system now that it is weighing on that growth. And without stimulus, and it just reinforces the points we've been saying, without stimulus, the economy is dead and it can't stand on its own 2 feet. So perhaps what we're going to see now in the next 6 months unfold is a slowdown, a larger slowdown in the economy, stock market sell off, risk off. And then you're going to get, the same playbook as we've seen time and time again. The Fed steps back in, starts talking about more monetary easing rather than tightening in a couple of years. Governments hitting the fiscal stimulus button once again. Yep. And that can only be positive for the type of assets that we're sort of looking at in the crypto world. But right now, in the very short term, we're in that sort of, risk-off environment where assets like Bitcoin and all the other cryptos are getting hit, along with gold, along with commodities, along with the US dollar, the Aussie dollar. So that sort of puts, I guess, our discussion today into a bit of context. So let's quickly turn to Bitcoin overnight. We're recording this on Tuesday morning. Overnight, we saw a decent fall in the Bitcoin price. On the not new news that China is doing something about
banning Bitcoin for the 199th time in my career. So So basically, there was old news, which was China's banning Bitcoin, which they did in 2017, which they did in 2014. They've done it a number of times over the years, but they've reiterated that they're not going to allow banks to allow cryptocurrency traders to use them to get into the crypto market and things like that. The only sort of new development is that basically they've put a ban on Chinese Bitcoin miners operating in the country. So the vast majority of Bitcoin miners in China have spent the last few weeks moving their mining equipment, which is like computers and hard drives and all that stuff, to other jurisdictions. A lot of it's gone to America, would you believe, to places like Texas. Some's gone to Russia. So the Chinese Bitcoin miners are moving out the country, which, look, is actually probably a good thing for the long-term future of crypto, because one of the things that skeptics and critics said about Bitcoin was, it's the mining power is there's too much control in China, and that is a potential weakness. If one entity has too much mining power, that is an attack vector on Bitcoin. So the fact that it's moving away from China is probably a good thing. The other thing that critics used to say was, China uses dirty coal, and so there's another thing that's gone away, because a lot of this mining power will move to greener power grids, whether that's Texas, which has a lot of wind power, or Iceland, which uses a lot of the geothermal and stuff like that, or Russia does the same in Siberia. Having Bitcoin mining more geo dispersed around the world is a great thing for the decentralization of the network. But I think because we're in a fragile market for crypto right now after the steep falls, it just, like you were saying to me before, any news is bad news. Even if it's good news, everything seems like a bad news attack. And we're seeing, I'm looking at the on-chain statistics, and what you're seeing is two things. You're seeing short-term holders, so people that have been in Bitcoin for less than 6 months, they're selling. And a lot of them on average are selling for losses. So that's, when you bought in at 60,000, you're losing half your money, you just can't stand it anymore, and you sell out. You finally reach a point where you just can't handle it anymore. You're nervous, just can't take it, and you sell out. And we're seeing a lot of that with the short-term holders. The long-term holders, on the other hand, have gone from a sort of trend of selling into the strength. They've reversed course, and they are starting to buy back in again. So longer-term holders are using this weakness to buy in, and they're doing it gradually. But we saw this in 2017-18 as well, that process where it switches from short-term buyers to long-term buyers. So with a bit of luck, we might see that buying strength come in over the next few months and potentially put a floor into it. But the price is looking pretty volatile now, so we may get one more leg down to 20K or something like that. You never know. The main thing is to take a step back, and on any sort of time metric, whether you're talking about a year, 3 years, 5 years, 10 years, Bitcoin and crypto in general is the best performing asset on any type of metric, risk adjusted or whatever you want to do. I think I saw a stat the other day said it's made 10 times what the Nasdaq's made in the last 5 years. And the Nasdaq, as we all know, has done pretty well. So I think the good thing about this service is that we've always said be patient, don't rush. We're taking long-term views on big macro trends that are playing out, and big macro trends never play out, super fast. They always take their time. And I think one of the good things that we said in the Bitcoin recommendation was the dollar cost average. So buy in a little bit every month and do that over, 6 to 12 months. And I think hopefully if people have done that, then this volatility is great for them, because they're going to, buy into their stake. It doesn't matter if the price goes down. If the price goes down, you buy more Bitcoin. And it's a really good way of easing into this new market with whatever capital you've decided to risk.
Absolutely. And one of the ways I sort of look at it is that what we're trying to do here is encourage people to accumulate the digital assets that will form the collateral of the new financial system. And that's not going to happen in 1, 6 months, 12 months. This is a process of years. And the first step is to really get you to understand how the system works and what it is we're doing. So when we go through these volatile periods, that you've got a little bit more understanding to deal with it. And I think dollar cost averaging is a great way to ease into a market that is in a downtrend. And like you said, when things are going well, anything can be construed into a bullish narrative, and then when things aren't going well, anything can be put into a bearish narrative. So just on China, before we get to the questions, what's your view on why they're taking this course of action now? What do you think is going on?
So there's two possible scenarios to that. One is the sort of straightforward answer that Bitcoin, the CCP, as an authoritarian regime that are in the process of developing a digital yuan, a central bank digital currency. They don't want competition to that, and so they're basically banning a competitor, and they're banning a free market competitor that they can't control. So authoritarian regimes hate Bitcoin because you can't ban, you can't confiscate someone's Bitcoin. You can't have that looming threat of banning their bank account like you can with a government controlled coin. So there's a simple answer that they're just trying to basically stop that being competition, and potentially even stop capital outflow from the country through crypto. Some theories that was the central reason behind the Hong Kong issues last year, why they sort of strong armed into Hong Kong and pretty much shut down the sort of free market system of Hong Kong, because before that, Hong Kong was a place where you could freely trade currency or trade them a lot easier.
It was a capital conduit to get capital out of the country. Yeah.
Correct, yeah. And you couldn't do that in mainland China. So now that Hong Kong avenue is basically being shut down. And so there's the other argument that says maybe they're trying to shut the crypto avenue because, obviously crypto is free to move anywhere in the world. You've got Bitcoin, you can travel anywhere in the world and take it with you. You can cash it out at another bank. So it might be a case of just trying to shut down that capital outflow, which would be a defensive strategic move from China in the face of, continuing sort of sparring with the West and America. So that's one thing, which is just a straight, hey, we don't like crypto, we're going to ban it, and tough luck, citizens that are into it. The other sort of more nuanced, and maybe this is just me thinking a bit too harebrained, but there's the possible scenario where China has built up a big Bitcoin stash over time, and they're quite comfortable with how much Bitcoin they have stashed away. But they also know that the arguments about China having too much control of Bitcoin and all that are things that will be bad for Bitcoin. So they could be doing the sort of show of, oh, we don't like Bitcoin and crypto, but really they're just sort of hedging their bet, saying, well, if the rest of the world does adopt Bitcoin, it's like having a secret gold stash and pretending you don't like gold. You know what I mean? So they might be doing that to see where the technology leads, knowing that they've got a hedge either way. Because for them to get back into Bitcoin mining would be very easy. They could start up the miners in a couple of weeks, just as fast as they got rid of them, they could bring them back. So if we got 12 months of Bitcoin development, it becoming legal tender in further countries, they might just be trying to stop an attack vector on something that they've got some part in. So that, that's maybe a more strategic reason. I don't know if it's true or not, but so it's one of two ways. But the main thing is, at the end of the day, it doesn't matter what China does. Bitcoin and crypto are the antithesis of authoritarian regimes like the ones that are in China. They're about empowering individuals. They're about giving freedom of ownership, freedom of capital. And in a way, it aligns a lot more closely with the ideals, at least of America and Australia and Europe. And that's why it frustrates me when our governments don't embrace it as much as they should, because that is, that is what a Western liberal democracy should be about.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.